This is going on 27 days that I've been in this trade. I mean, I've just been holding this thing, and every time it breaks through the highs, I've been trailing stops a little bit tighter. If I can get 60 days holding this trade, that would be crazy. It would be a trade for the ages. With this failure, with this double top, and now kind of confirming by breaking underneath all this structure, I think that this easy trade momentum that was for the dollar yen is definitely going to have a little bit of a tougher time now.
Very, very good technical setups on gold.
This year especially, this chart has kept me in some of my best trades of the year. Bullish prediction, correct. 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 Bearish prediction, correct. Bearish prediction, correct. Bullish prediction, correct. Seasonally, this has been a year that has basically followed suit with what seasonality was predicting. So it's been very interesting. When you have US holidays, we added this link. If you're ever curious, if you have the Edge Finder, just click this link. It will take you to the COT's scheduling and why sometimes there are some delays and people do get confused by that. So please remember that when you have a US holiday, the COT report usually gets delayed by a day or two. In terms of COT, on an overall basis, we still have USD still kind of bullish. Gold, however, still hanging in there, very bullish. And I think that this could be, a nice foundation to gold. However, the latest filing for gold was not so great, right? You saw actually some selling on gold on the institutional level. And so I'm pausing, I'm cautious on the gold longs until we get the new COT data. I'm very curious to see what that COT data comes out to be. And we will get that updated here in the Edge Finder whenever it's automatic. So the software will automatically pull the new data. If talks of potential rate cuts come into the picture, this market, in my opinion, is going to keep running hot. And by the way, I do have my stop trailed. I'll show you guys my actual position. S&P 500 still long. This is going on 27 days that I've been in this trade. And it is, in fact, a trade. I mean, I've just been holding this thing, and every time it breaks through the highs, I've been trailing stops a little bit tighter. And I haven't done so much as recently just because volatility slowed down tremendously during the Thanksgiving break there. However, as we get into this week, I do expect volatility to kind of pick up a little bit. We still have a few weeks here where volatility is expected to be a little bit higher. And so, for me, I stay long S&P as long as we hold this level. This is the 4,500 level on SPX 500. For those of you guys who are curious, of course, talking about this area here, that 4,500 level. As long as we hold above that, I stay bullish on the S&P, hopefully for the remainder of the year. If I can get 60 days holding this trade, that would be crazy. It is very unlikely to happen, but it could. And if it does, it would be a trade for the ages, for at least for my personal trading journey. But if you take a look at Euro in the month of December, it is historically a positive month against the US dollar. If you take a look, for example, at the S&P 500, which has performed very well in relation to seasonality, if I can find it, there it is. So you take a look at the S&P 500, look at this, beautifully predicted by seasonality. Now, I say predicted lightly. This was, of course, there's always the possibility that it breaks the trend of seasonality, but this year especially, this chart has kept me in some of my best trades of the year. I've followed seasonality very closely on the S&P, and look at this. January is pretty much kind of a mix. February is correct in its idea. March, it was mixed. But then you look at what kind of starts happening. Bullish prediction, correct. 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 Bearish prediction, correct. Bearish prediction, correct. Bullish prediction, correct.
Want to stay up to date with all the latest trading information? In the description below, you'll find the link to join our free Discord. The Discord gives you instant access to lots of helpful material like free trading courses, chart analysis, updates about what's happening in the A1 community, as well as discount codes for our other products and services. The best part, all of this and more is 100% free. So go down in the description below this video and check it out for yourself. If you're interested interested in upgrading to the full VIP Discord featuring our team of expert trader signals, you can use the live chat link in the description to get connected with one of our team members in seconds. So don't wait, go check out the free Discord today.
Seasonally, this has been a year that has basically followed suit with what seasonality was predicting. So it's been very interesting. If that trend is set to continue, we should expect, now of course, markets are not this predictable all the time. So there is the possibility that we see a negative December, but if it follows the trend that it's been doing this year, we should expect to see bullishness in December in the fourth quarter, especially at the last year of a presidential term that is historically a very strong time for the S&P as well.
Oh, this is a great time because when did we talk about dollar weakness? Did we talk about the dollar weakness the day 14th of November or something? And I've been dollar weak ever since. So I don't know, when did I get in? Yeah, so I'm still in it, and I'm still buying euro dollar around 108.40 or something in that direction. But yeah, still I think it's going to continue. My only question is this week, the end of the month, kind of short-term volatility. Are we going to go ahead the big drop and then go higher, or are we just going to go directly continue higher? So that's going to be the question.
Yeah, it is. And you know, in terms of catalysts this week, I'm just flipping through the calendar. You have consumer confidence tomorrow. You have, let's see, nothing really on Wednesday. Then you have core PCE on Thursday. But I think, you know, one thing to add about core PCE right now is that we've already had recent readings on CPI and PPI, which showed some cooling. So I don't necessarily think that could be a huge market mover, but maybe we'll go to Frank with the fundamentals. Frank, any catalysts that you think are on the horizon, or is it just kind of a runway to see markets continue going for a little while? I mean, we don't have a big FOMC meeting hanging on the corner. So it's like, what do we look at next?
I think it's really just going to be the PCE. Hopefully it comes in what we're expecting. You know, other than that, I'm not sure how impactful PCE will be in terms of, you know, the other metrics we've seen from CPI and core like that. But I think if it's showing that general route of decline overall in all the inflationary metrics, and that'll be a good sign. And on top of that, it's the expectations of lower inflation and kind of the end of rate hikes is definitely impacting what's going on in the market. Like if you look at gold, that is already pricing in a lot of anticipation of that end to that trajectory. I mean, price retested those highs and actually broke above, but still hovering around the 2011s, 2010s, just kind of in a really good recovery on the gold market, which what we were looking at earlier was that that head and shoulders pattern that came down to support. Very, very good technical setups on gold. Right now, I think it's about just watching price action for the next few days, watching what PCE comes in at. And if we get a higher number, that's probably not going to be too great for price. But if we can either watch for a breakout above here on the daily time frame above the 2011 mark, I think that's a good sign. We could look at this to support, or we could see a pullback coming down to the 1990s, which would be kind of a big move for gold. So that there are just some places I'm looking at gold, but other than that, the markets right now are very mixed, and earnings season is still rolling out, so it's nothing too exciting. But I think gold right now is the one to be looking at, and you can see here that over the past couple months have just been huge spikes in buy volume, and so this cluster kind of suggests, you know, that we're gonna we're gonna likely see more upside in the future. And yeah, that's kind of it right now. I'm looking at gold, but market's not so much. I'm still holding the S&P trade, but I'm not really. I'm very hesitant to continue buying on that front.
Fair enough. And Ivan, back to you on the currency side. So obviously gold an interesting one to watch, and I'm with you too on that, Frank. That breakout looks really interesting to watch closer. Ivan, you've got dollar yen pulled up. What are you so what's the change? Because I think you were bullish yen crosses, and now are you kind of getting bearish on specific ones?
So I'm glad you asked. Yes. So no, it's just it's what I do every year, Nick. End of after Thanksgiving, yen pairs tends to fall. So it's more like a short-term thing, more like opportunistic tacticals, because I believe yen pairs are going to go back up in December anyways. So yes, I did short. Was it USD yen on Friday or Thursday? So I was a bit of a drawdown, but it has helped. So it is with the expected yen strength and the expected dollar weakness that I took that trade. Not the best trade in the world, not the best entry in the world, but it goes.
Yeah, and that's the thing with entries is sometimes people get so caught up in trying to catch the perfect entry. It's almost like, if you just accept that it's okay to stop out quick and look for a re-entry. But in this case, you took minimal drawdown and now you're in a nice position there. So I think dollar yen from a technical perspective, I think if you look at the daily chart, you've got something really interesting happening, which is that at 150 level, we talked about it. Well, 151 really. This high, we talked about this for a long time on the streams, just being this rock solid upward trend. And with this failure, with this double top, and now kind of confirming by breaking underneath all this structure, I think that this easy trade momentum that was for the dollar yen is definitely going to have a little bit of a tougher time now with all the dollar weakness that seems to be into the market. And at the same time, of course, at any point, Bank of Japan intervention stuff could still come into the picture. I don't hate it. I actually kind of agree. I like your potential short there on dollar yen. It's had a massive run up, and that to me is not by itself a reason to short something. However, if you have some seasonality there and you also do have signs of momentum breaking down, like I think we do, could be an interesting trade and probably some good risk to reward there. So any other yen pairs, Ivan?
Well, this Aussie yen is not in my real account. This is my demo account. But this was or would have been a very good one. But what I'm looking for tomorrow is euro yen to come back up to 163, give or take, for like a short little retest. And then going lower. So euro yen is the one that is the weakest today. I did trade pound yen here, so that is basically just starting out. That was a mistake because I sold it low. So I'm the first one to say I made a mistake. But I was planning for tomorrow anyways. So okay, cool. I have that at least. And then yeah, so euro yen is kind of my top candidate for tomorrow. That's what I wanted to say.
Okay. Fair enough. And while you're on the screen, Ivan, what do you think about gold?
Okay. Breathe. Okay. Did I expect this one to go higher? I don't know. I flip biases faster than I can flip my t-shirt. But definitely in the direction it should go in soon. It's a bit early, more like December. So yeah. Other than that, well, no, yeah, okay. But for me, like, this looks beautiful. Technical analysis without having made any predictions and say, oh, I was right. I was never right on this one. But to me, it's bullish, and for me, it can go up forever. In this case, until February.
Yep, fair enough. I always like to think when it comes to gold, they definitely print more dollars, but mining gold is a lot harder than printing paper. So over time, gold inevitably kind of goes up as more fiat currency gets printed. But That, of course, is a long-term kind of effect, similar to stock indices. They do go up over time, but there can be some very tumultuous times in between. But I do think gold, I think Frank and I are on the same page. That level of resistance kind of being broken, and watching for a daily close here on gold above this level could be really interesting. And I think it's due for more move to the upside. We've had there's a couple reasons here, and we discussed this. Our commentary, Ivan, I think you even saw that video. I saw your comment on that video. We discussed this, and that clip got put up on YouTube. Chandler put that up for us over the weekend, and we were discussing this idea that, like, if any concerns about recession do come into the picture, do rise, gold will fly, because in a deflationary environment, gold actually historically tends to do very, very well, and that is because, of course, people are anticipating that if deflation were to even become a concept, that the money printers would go back on, because that's the last thing that the Federal Reserve, that scared the heck out of them in 2008. They don't want that to happen. So gold will probably watch and say, well, they're about to print some money, and that's going to cause gold to fly. So it's markets are very forward looking in that regard. So it'll be interesting to see that combined with what seems to be the end of rate hikes. I think gold has plenty of upside, and I'll be looking personally for opportunities to get involved on pullbacks, similar to how Frank illustrated. So will be interesting to see from there. Frank, is there anything other than gold that you're watching? Anything on the currency side?
I'm just watching the dollar.
Okay.
I guess what I'm looking at is, weaker dollar. These tests on the trend line, they're kind of dwindling. They showed like a completion of the channel's trend, but then the past two attempts, they haven't been able to do anything. So every time it hits, establishes a lower low, comes in, hits a lower high, and then moves lower. So I think the general trend of the dollar is down, and it's going to keep going that way. And that I agree with Ivan on short UJ. So I think overall, lower dollar means looking at things like EU and GU to the long side, gold to the long side, and markets, stock markets to the upside as well. We just have to give it some time for all this sort of news to go through. I also have a question though, because I know we're looking at you're presenting the idea of a deflationary environment, but is that something that's like a concern right now, or is it something that could happen? I would maybe like next year or the year after, where inflation comes in too much lower than what we anticipated, and the economy is slower and things like that. Is that like a big concern, or are we? Because I feel like we still we're hoping for a lower inflation rate for the next year, and we want to keep it at 2 or under 2. But at what point do you think we're at a deflationary environment, and that's what's going to prop gold up higher?
Yeah, that's a really good question, and I'm glad you mentioned that, because I do want to, I guess, clarify. Like, you're totally right that the deflationary concern is not it's by no means like in the immediate future, because I think, like, for now, the market is still saying, hey, a slowing economy and slowing jobs growth is actually good in terms of getting that inflation thing under control, and we're still not we're not even close to the deflationary concept just yet. So I think that for now, until the end of the year, that's where I think you still just have a nice Goldilocks zone, a sweet spot to see risk on assets, as we kind of all are pointing to, like a weaker dollar, currencies that have gone against the dollar for a while to have been beaten up by the dollar, to see some appreciation, to see gold and stocks to potentially have more upside. So to that point, I think that for now, totally not really like front and center. The other thing I was mentioning is that if that economic growth like continues to slow, like if you see a period like going into next year where it keeps slowing, and then it gets to where we wanted it to be, and then it keeps slowing further, that could be, that could be 8 months away. So it's definitely, to your point, it's not like an immediate concern. It's just the question of, did all this rate hiking stuff that went on, is that going to have delayed effects to swing us all the way to the other side? And in that situation where a recession becomes possible, that's where I think gold could potentially rally as people kind of lose faith in the Fed. Now, I'm not saying that that's what I think is going to happen. I just think that part of the gold updrift would be the possibility of that happening, rising, is enough to get the price to go up. Not necessarily saying that's what I think is going to happen, but the possibility and the concern about it could cause a spike in gold's price. But it's very theoretical and long term. But to your point, right now it's not an issue. And I think as traders, let's wait to really pay close attention to that topic into the future. So I think that's a good way of pointing that out, Frank. Thanks for saying that.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.